Good morning, everybody. It is Cinco de Mayo, Monday, May 5th, and we're going to start our prep here for the week ahead. First, before we get started, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, we'll start off today looking at our COT data that came out on Friday. We noticed that Bitcoin commercials are net long. Again, they've been running this game for a while. When we see them net long, we see price push higher for them to distribute. When it goes to a negative short position, we see price begin to drop. So we've seen the push up as they've been long now for a couple weeks. They added some last week, so we are still looking for sideways to upside on Bitcoin. The other thing to note is that commercials are still long the S&P. They went long a few weeks ago. However, they are distributing here. They sold 6,000 contracts last week. The prior week, they sold about 4,000. So we are seeing the selling on these up moves into what we've shown before, the positioning of our systematics and the positioning of active investment managers. So when we look at systematics, we are seeing a bid this week up to going from about 20% invested to close to 50% invested. So we are talking a very large amount of capital coming in, but still not that much in terms of how much the system typically the strategy has in assets under management. When we're talking $600 billion, it's going to be a larger buy this week, but this is really the only window for that before we have a lull until July. So we are looking at Friday as our biggest bid day of about 20 to $30 billion. And sorry, that will only get us, I apologize, up to about 50 billion invested, so that's 20% of the portfolio. So we're going to go from 10% to 20%. We're going to have 80% of the capital on the sidelines. And what this looks like, if we go back to 2022, you see when our red is above our green, just as we are now, and the green is very elevated, we can have a very large bear market bounce. But when that red gets back over the green, so we will look for this week, our red is going to come under our green, but that green is going to stay elevated. So that brings the potential still for that next leg down. And this is what we saw in 2022 because these strategies are a very large portion, again, $600 billion in assets under management, and they are only going to have about $50 billion into the market, and most of that comes on Friday. So that is something we will be paying attention to. That'll give the commercials that are net long from that COT report, that will give them a nice buyer to sell into. They'll be able to distribute a good amount of this, but also it's limiting how much there really is after that. And so we are going to be paying attention to the positioning as we move through the next couple of days and weeks. As we look at positioning for our catalysts this week, we have FOMC. That's our biggest point this week is Powell and the FOMC on Wednesday, and nobody has insurance. Nobody's protected. So we will look for our washing machine to return. We saw this last week when we would tell you that we were expecting that downside pressure. Again, this week we will be looking for that downward pressure as well as we see the commercials drop prices, everybody buys, and that demand comes in and then push the market back up so the insurance providers can collect their premium and not have much risk going into these catalysts. So that's the game plan this week. And let's take a look across the board now at our volatility. First, credit risk still in the market. This has not changed. And so we are looking for that to kind of maintain on our overall volatility. We can see that oil volatility really started to break out as oil broke down. It's still holding that key $55 level that we mentioned in the past. Saudi Arabia has stepped in, even though they've now come out and said they won't support oil. The hold overnight. We'll see if that still is true or if they are just giving a narrative to the markets. Big key here is we are still waiting for the VIX, so the darker blue line here, to get underneath 20. And as long as that stays elevated, which we're gapping up on the VIX today from 22 to 24, that will signal more downside. So as we look to get the VIX back to 1895, we are watching for those spikes in volatility as this is the positioning right now in the markets. There is a business cycle that ends in 2 weeks, and that's really what we're going to be watching for as the market is more supportive until then. But we are seeing these Vanna and Charm flows begin to run out. And so now on to our overall for the day. So if we look at the S&P today, we are looking for rotational price action from 56.16 to 57.07. Now, for those professional subscribers that use the website, Sticks Trading, you can get these levels overnight. You can get them on Globex Open, so you could have been prepared for the short at the rotational high on the open. Our line in the sand is 56.93, so again, staying under that, we will look for now a little more downside pressure and a little bigger swings in the market. Friday, when we got over our line in the sand, and as we've been over, we're seeing that tighter range, smaller, choppier price moves for the most part. And now we can look for those bigger moves as long as we stay under that 56.93. We do expect to see that downward pressure again for the insurance. And so some other key levels outside of just our rotational zone and then our pivot at 56.54 are going to be 56.46 and 56.21 3/4 for you. So you can pay attention to those here. And those are the areas that you want to be watching for today on your ES. Now, onto the NASDAQ, a little bit different here in comparison to the ES. We are over the line in the sand. And it had a nice breakout of the rotational zone on Friday and then had a nice one directional move for Friday as we broke out and went to that upper zone. You can see that here. That's what we were looking for in our room. We missed the high of day by about a point and a half. So now that we are back inside of our rotational zone, we can look for that more sideways, back and forth price action. But as long as we stay over 19,437, the flows will be a little bit more supportive in the NQ. So we will look for rotational price action today from 20,198 to 19,780 with our pivot at 19,955. So we're just above that pivot at the moment. The other key levels that you want to pay attention to today are 19,866, 19,670, and 19,583 on the downside. And above us, 20,268 3/4 and 20,026 3/4 will be your key levels on the NQ. Now on to oil, and then we will finish out with gold, which has been a very nice move through our plan that we were looking for. So oil, $55 is our key. We came down to 55.30 in the overnight and held. 55 is where we've typically seen support over the last several years, and we'll see if Saudi Arabia is going to hold true on not stepping in there again. For now, we're going to look for longs there until we get confirmation of that. If we do break that, we mentioned a few days ago that we have a target in the 48.60 range, and that would still hold true if we get under that 55. For now, we are looking for rotational price action from 56.80, which we're just above, back up to 59.30 with our pivot at 58. So any move up to 58, we will look at first for a short as we are looking for that sell at the pivot to go back to the rotational low. And if that changes, then we would look for a long at 58 for a move back up to 59.30. Our lower pivot is at 55.30 and our target is 54.40 below that. So if the OVX continues higher as we showed, we should see an expansion on our range, and especially if we break our $55 point. On to gold. We mentioned that we were coming back inside the rotational zone on Friday and right back up to the pivot, and you can see that here. This was Friday, so we hit our lower target. That's a good buy zone when we're in a bullish trend. And then we held our rotational zone, and now we've pushed all the way back up. So we were looking for, after NFP, a break out of this consolidation that we had been having, and we got that on our move up to 33.29. So we are looking for rotational today. If we get back underneath 32 or 33.12, we will look for a retest of 32.86. That's the middle of our zone, and the bottom end of that is at 32.41. Other key levels on gold today will be 33.12.58 and 32.90 3/4. as well as above us at 33.45.22 and 33.66 3/4. Those would be the biggest levels to watch on gold over the next day or so. Again, we should see some downward pressure coming in on equities, possibly on the dollar, which would support gold as well. So be cautious on those flows. And again, make sure that you control your risk. We talk about this each day, but that's the number one thing that you guys can control and helps us stay in this game longer. So as we look at our positioning, again here for our commercials, we are long on the S&P, and the commercial side of the market is the one that can take on these very large long positions, very large short positions. They control their risk over multiple months, multiple quarters. Um, as day traders, we have to do the same, but we do it on a much shorter time frame. So make sure that you guys are controlling your risk today and each day so that you can stay in this and keep waiting for the next right trade. So have a great day. Stay safe trading out there, and we will be back again tomorrow.